Listen, brother, look at your bank account right now. You see $10,000, thus maybe $50,000 sitting there, clean, safe, untouched. Feels good, right? Feels responsible. Maybe even makes you a little proud because you did exactly what everyone told you to do. Society, your parents, save your money. But let me be brutally honest with you, bro. What you're looking at isn't safety. It's a silent loss happening in real time. That money isn't protecting you. It's slowly evaporating while an invisible tax eats away at every dollar you own. You think you're building a safety net, but you're actually building a trap that guarantees you get poorer every single day you leave that money sitting still. And if I have to explain this 10 times for you to really get it, I will, because nobody else is telling you straight. By the end of this, you're going to see why your safe money might actually be your biggest liability, and how the system profits from your fear. Let's break it down, simple and clear. Banks are hoping you never actually do this math, because their entire business depends on you not understanding it. The average savings account pays you almost nothing, fractions of a percent. Meanwhile, inflation, it's running at 3%, sometimes more. So let's be real. If you're earning 0.5% and losing 3%, you're not saving. You're paying a fee, around 2.5% every year, just to let your money sit there doing nothing. Think about that, bro. You're paying the bank to hold your money, while they take it, lend it out, and get rich off it. You've got $50,000 sitting there today. In 10 years, that might only feel like $37,000 in real purchasing power. That's a $13,000 loss. And you didn't even touch the money. That's what I call a silent heist. They use your money to fund car loans, mortgages, credit cards, making 7%, 15%, even 25%, and you get crumbs. And somehow you think you're the smart one playing it safe. Now listen carefully. This isn't because you're bad with money. It's deeper than that. Your brain is wired this way. If you grew up around financial stress, your mind treats money like survival oxygen. Every dollar feels like protection. When you see a big number in your account, your brain relaxes. It tells you you're safe now. But that feeling, it's a lie in today's system. It triggers something called loss aversion, where losing money feels twice as painful as gaining it feels good. So you avoid investing because you're scared of seeing red numbers. And instead, you accept guaranteed losses through inflation because it feels safe. That's how the trap works. And here's what most people don't understand. Your money isn't even sitting in a vault. Banks don't work like that. It's called fractional reserve banking. They keep a tiny piece and lend out the rest. Your savings, that's someone else's loan, someone's car, someone's business, making the bank serious returns while you get almost nothing. So when you hoard cash, you're basically working for the bank for free. You're supplying the raw material for their profit machine, while inflation taxes you on top of it. The wealthy, they understand this game. They don't let money sit still, because money that sits dies. Let's put real numbers on your fear, my friend. Let's say you keep $50,000 in savings just in case. But realistically, you only need $10,000 for emergencies. That extra $40,000, if you had invested it in something simple like an index fund returning around 10%, over 30 years, that becomes nearly $700,000. Think about that. Your safe decision didn't cost you nothing. It cost you over $650,000. That's the price of comfort. You're literally paying hundreds of thousands over your lifetime just to feel safe. That's the most expensive insurance policy you'll ever buy. And another mistake people make, they don't even know what an emergency is. They treat savings like a flexible spending account. Oh, I've got money, I can take a vacation, buy a new couch. No, that's not an emergency. That's lifestyle spending. A real emergency is something that forces you to sell assets at the worst possible time. That's what your emergency fund is for. It's not there to upgrade your life. It's there to protect your future. Because when things go bad, job loss, market crash, cash becomes oxygen. Without it, people panic and sell investments at the bottom. That's how wealth gets destroyed. So what's the move? Not zero cash. I'm not saying that. I'm saying be strategic. I call it the liquidity ladder. Step 1, your checking account. 1 month of expenses. That's your operating cash. Step 2, your emergency fund. 3 to 6 months of real expenses in a high-yield account. Not some garbage account paying nothing. Get 4 to 5% at least. And once that's set, you stop. No more piling cash. Everything else goes to step 3. Your wealth engine. That's where your money actually works. Index funds, assets, investments, that's how you fight inflation. Now I know what you're thinking. What if I'm scared to invest it all at once? Good. That's normal. So you use dollar cost averaging, split your money into parts. Invest it over time automatically. That way emotion is gone. If the market drops, you win. Because you're buying cheaper. That's how real players think. You turn fear into advantage. And let me make something clear. If you're young, your biggest risk isn't losing money in the market. It's not having enough later because you played it too safe. Historically, markets return around 10%. Inflation eats 3%. That's a 7% real gain. Cash gives you nothing. So the difference between investing and not investing is the difference between freedom and working forever. You need to stop thinking like a saver and start thinking like a capital allocator. Every dollar is an employee. If it's sitting in your account doing nothing, it's lazy. Fire it. Move it somewhere it works. Figure out your monthly burn rate. Multiply it by 6. That's your cash limit. Anything above that, it's dead weight. It needs to be deployed. And automate this. No emotions, no decisions every month. Once your account hits a level, the rest moves automatically. Because comfort is expensive. Keeping money in the bank is a tax you're paying to your own fear. You need to get comfortable being uncomfortable. That's the price of real wealth. The truth is simple, bro. That safe feeling, it's an illusion. Your bank balance stays the same, but its power drops every day. Meanwhile, investments fluctuate, but grow over time. One looks stable, but loses value. The other looks risky, but builds wealth. That's the game. And don't ignore taxes. Savings interest gets taxed at the highest rate. Investments, lower taxes on gains. So you're choosing the worst returns with the worst taxes. That's a losing strategy from every angle. Also understand this. There's a difference between saving with a purpose and hoarding out of fear. If you're buying a house in 2 years, sure, keep that cash safe. But if you're just holding money just in case, you're stuck in the trap. Every dollar needs a job and a timeline. Inflation isn't just prices going up. It's your future getting more expensive. The life you want in 20 years, it will cost way more. If your money isn't growing, you're falling behind. Guaranteed. The wealthy already know this. They move money fast. They don't let it sit. They treat it like something that loses value if it's not working. Because that's exactly what it does. So let me ask you something, my friend. Are you actually saving, or are you just slowly losing money in a way that feels comfortable? Because at the end of the day, this isn't about numbers. It's about decisions. It's about whether you keep playing small and safe, or you step into a system that actually builds wealth. You don't need to be a genius. You just need to be consistent. Build your safety base, then build on top of it. Ignore the noise, ignore the fear, trust the math. Because every day you wait, inflation is taking a piece of your work. And I'm telling you this straight, brother. I already have everything. I don't need this. I'm saying it so you don't waste your shot. So move the money, build the system, and stop paying the fear tax that's keeping you stuck.